Good afternoon, everybody. Welcome to your Tuesday edition of the TraderMerlin Show, an inflation-packed day. We're just going to talk about inflation most of the show today, maybe a little bit of market overview stuff. All the trades that I wanted missed my entry point, so nothing for me today. Unfortunately, I know some of you may have actually been trading that S&P at about midnight last night when it fell below that level we talked about on last night's show. And if you did, you had a great trade on. So unfortunately for me, did not pan out for my trade. And I'll walk you through that trade as it is. So here is the topic du jour for our 861st show of Trader Merlin. Topic today is inflation back? And I want to talk, about quite a few things obviously today, but the main one going to be what happened with the inflationary data today. Now, yesterday I was talking about how my expectation was inflation would actually look better than expected simply because on February 9th, they rebalanced the calculations. Now, hold on a second. Here's where I think I made a mistake. The numbers we saw for today reflected January's numbers for inflation. If they're rebalancing the data as of February 9th, that means that next month's CPI numbers will be the cookbook. So I apologize for that one, but I was thinking about it last time, like there's no way they would rebalance these numbers and all of a sudden show higher inflation. It doesn't make sense. So keep your eye next month on when we get to March, when we get our March CPI numbers. Then we should get that new, no chasing, Merlin. Nope, definitely not chasing. You got it, Margaret, and I'll walk you through exactly why. It's frustrating when things do exactly what you thought they were going to do, but at the wrong time and you're missing it. It is what it is, life of a trader, no big deal. So let's look at the inflation numbers as they came out today. Here is your CPI data for the U.S., and you can see it's not like it's dramatically off, right? It's just basically stayed right where it was the previous month at 0.3. They thought it was going to drop, but to be honest, for the past 2 months, they thought that this was going to drop to 0.2%. So if you annualize 0.3 over the course of 1 year, right? So 0.3 times 12 is going to be 3.6% inflation. I certainly wouldn't call that astronomically high compared to what we had, a couple of years back. If you annualize 0.2%, then that gives you roughly 2.4%, which of course would be what the Fed is looking for. So ideally, we want to see these CPI numbers trickle down. And I thought, well, let's look and see what's driving this, because I've pointed at a couple different things on the show that, in my opinion, are going to drive inflation higher going forward. And I certainly pointed out at the end of the year and going into our beginning of the year show that for me, the biggest wild card, crude oil. And we've seen, some nice moves up in crude oil, and all of a sudden we're seeing inflation data tick up. So what do you guys think is the biggest component of CPI? When you take that inflationary measure that the Bureau of Labor Statistics is looking at, right? All these things that you and I consume, what would you say is number one and then number two? Give me number one and number two. So what's the number one driving component of inflation, consumer price index numbers, and what do you think number two is? You can put them back to back. I'll know which one by the first one will be your first calculation. I'll bring up a nice little graphic here to reflect that. Now this graphic was as of 2022, so I'm a year back, but still it's going to be roughly the same until they come up with a better rebalancing. So here is the calculations as I wait for you guys to type in. No, a lot of people think it's food. It's actually, if you think about it, it's shelter. It's a place to live. So on this chart here, you can see that 32% of it was shelter, meaning rents, housing prices. So keep that in mind, because part of my discussion today is gonna focus on shelter and the driving components of that. Number two, 14% is food. Then you have transportation, commodity, motor fuel, but that's not including. I don't think that is. It says 8% is transportation commodities, except motor fuel. And I look through here and I'm going, well, where does motor fuel fall in? Because that's, to me, in the energy section, which is roughly 8% as well. So even though I put crude oil as my biggest wild card for the year, you see that real estate is actually a bigger factor here. So let me ask you a couple more questions, and I really wish I didn't have this delay. Unfortunately, I have to do it with streaming, otherwise I get these really weird gaps in the stream. If looking at that calculation and you knew that shelter was 32.39%, in your mind, you're going to immediately start thinking about what are the pieces that are going to drive shelter prices higher. You tell me. Engage with me in chat today. Come on, let's have some fun. I love the engagement already. I see when you guys thought number one. I saw food, energy. Tom is right. One of my major expenses is the Habit burger, but no iPhones. Food, gas, food. Well, nobody in here thought shelter. Interesting. Cool. Well, you learned something new today. The biggest calculation for the inflationary metric for CPI is housing. So what is the, Chio, I can do that. I'll do a show on that tomorrow if you want. I'll do a daily routine for a trader tomorrow. What's going to cause housing prices to rise? Remember, look at it from a perspective of you just bought a home, right? What's going to dictate your rent is not only the markets, what the markets will bear, but if I'm paying on my mortgage, let's say I purchased this property and my mortgage, including my property tax and my insurance, comes out to be $2,500 a month, then I'm not going to rent that house out for less than $2,500 a month. I'd be losing money. So I need to rent it for higher than that and hopefully make a profit, because that's what you're trying to do if you're renting. Which means that the more I pay for my mortgage, or those input variables of property taxes, your mortgage, and your insurance, as those increase, my housing costs increase, and therefore I'm going to charge my renters more. I'm hoping that makes sense for everybody, right? Yep, Liz says mortgage rates, rent increases. Yep, but rent increases are going to be, in my opinion, proportional to rising interest rates. And did you guys see what happened with the 10-year today? Oh, we talked about a breakout potential to the upside for the 10-year, and oh, Lord, check out this pop today. It was up over 3.5% today on that 10-year. Actually went right through my next supply zone, which is not really a good sign. I'll get rid of these now because it's out of play. This is very interesting. If you look at this, your yield surged today. Now, granted, this doesn't mean that immediately everything's going to rise, but just keep in mind that if this does trend back up and get back up to higher levels, which I do believe is going to happen. I do believe that by the end of this year, we'll be at 5.5 or higher percentage points on that 10-year. As we get to those levels, that means that people are not going to be able to get a mortgage for 6.5% or 6%. It might be 7 or 8. And then all of a sudden, my cost all in with property taxes, insurance, and my mortgage is going to move from $2,500. Maybe the next guy's going to get it. It's going to be $3,000. All of a sudden, rents start to jump up. So keep that in mind. If we see this 10-year continue to move higher, anyone who's buying rental investment properties now is paying a higher cost basis for their property, and therefore they're going to pass that loss on to the renters. So you've seen rents increase significantly, and then I'm going to look at food here in a second. But let's dive a little bit deeper into what happened for the month of January. I think that this is a very telling chart. So when we look at the inflation numbers, the biggest hits happened in rent. Here is the list of components, and I apologize if this is hard to read. If it's too small, I might be able to, I'll read through some of them here for you guys. Rent was up 6.1%. I'm hoping, let me just look real quick. It didn't tell me whether this was annualized or if this was monthly, because if that's a 6.1% increase in the month, that's monstrous inflation. I'm going to go out on a limb and say this is annualized. Rent increased to 6.1%. I'm not 100% sure on that one, but I believe that is probably correct to say that 6.1% is your annualized rate. So if that's the biggest component, and we're seeing that as the biggest increase, my expectation would be that going forward, inflation is going to rise. And again, this is just me thinking out loud. If you guys think differently or get it or want more clarity or support it, let me know in the chat, because to me, all signs right now, based off this, are pointing to higher prices. We have mortgage rates increasing. We have costs as well. I'd like to see the costs of insurance and things like that, but I don't see that actually on this list. And property taxes always go up, right? They're always going up. So if I know the mortgage rates are going up, I know property taxes are increasing, that's going to get passed on to the consumers in the form of rents, which is 24% of the overall makeup, or 23% of CPI. Therefore, the signs are pointing to a higher CPI. But wait, there's more. And again, please don't get me wrong. I'm not here trying to paint a doom and gloom picture of the market. It's just saying right now it doesn't feel like people are thinking that it's going to increase this much, but the data and the trends and the driving components are painting the picture. And to me, that's where we have to make our play. Based off that does kind of skew me a little bit more towards the bearish side here. But let's look at a couple other components. One of the pieces that you see in this puzzle is food, 13.99%. Now, of course, we know that producers of food products, many of them are hedging their costs by using the futures markets to procure the price of grains or coffee or wheat or soybeans, whatever the components it is for their business. They're using the futures markets to hedge that a little bit. But let's just go real quickly look and see what's happened, not only the past year, but let's just say the past couple of months. Because to me, the past couple of months are what's really telling. That's where things are starting to pivot. So let's go and look at, here's cotton. All right, so you can all see my charts here. If you look at just from the November lows for cotton, we're seeing a 23% increase. Now that doesn't fit into the food category, which was 14%. That fits into the apparel category. So even though we see something with a monumental move, 23% for cotton up in just the last couple of months, that's huge. But that's only 2.67% of CPI. So while it looks just disastrous, it's not that bad. Its move is smaller relative to the whole. Okay, so I wanted to emphasize that one. Now let's go down here. Corn. All right, so we've seen corn in that same window of time that we saw cotton sell out or gain about 23%. Oh, come on, Merlin. We've seen corn have a precipitous decline as well. So there's your food cost, 18.28% slide in corn since October of 2023. And of course, that to me makes up a much bigger component when you look at this table. Food at 13.99%. I'll get to lumber in just a second, Pepe. Yep, that's going to affect quite a few different things here, right? All right. So all in all, if I look at these two, cotton looks way worse, much better, but it's not as impactful because it's in that apparel segment, which is less than 3%. However, corn, which is food, a lot of food products, and it doesn't exactly say what that corn is being used for. Is it high fructose corn syrup, methanol? Is it just consumption? So 14% there. This was much more impactful. This is going to have a drag down on the inflation numbers. So we've got shelter, rents moving up, bond yields moving up. Most likely that biggest chunk is going to continue moving up. I'm going to try to focus on the foods here. So let's go to wheat. All right, so wheat in that same window of time, really not doing too much. If you go to those November lows, which I'm kind of using as my basis here, you're looking about an 8% increase. So not too bad. That certainly is above your 2% mark, but not too bad. Here is soybeans. So if I go soybeans back to that peak in November to where we are today, soybeans are down 15%. So all in all, looking pretty good on the food side of things. Now, I might have a couple others here. Let's go look at sugar. All right, so if I go to those lows we saw in November to where we are right now, sugar's up 15%. I don't think I have orange juice on here, but orange juice has surged again. So sugar, obviously, using a lot more than orange juice, but that's another food product. Let's go to OJ and see if I can get the current OJ one, because that was all over the place as well. There we go. And orange juice, it had that huge pullback. Of course, it happened right as I wrote my article talking about my bottomless mimosas disappearing. Right now, from its lows we saw back in January, orange juice is up another 21%. So we are seeing a lot of commodities, at least in the food sector, move to the upside. We want to look at live cattle. Let's go live cattle futures. So yeah, it's funny. I love to use my smoker, and I smoke all kinds of stuff for the football games. While this chart looks much more dramatic, that's only a 13% move off those lows from last December. So interesting. That is not the worst looking. It looks horrible, but it's just because of the scale here. Certainly the ribeyes I've been finding and the tri-tips and everything seems to be much, much, much more expensive. I don't know if I can get olive oil futures. Let me see if I can, Margaret. Do I have olive oil? No, unfortunately, I don't get olive oil futures. That would be interesting if I did get that one. I'll see if I can find out somehow. Yeah, but I know olive oil was surging. If you look at cocoa, go to cocoa futures. I mean, cocoa is really having a surge, and cocoa really never stopped, right? If you look at from those November lows we talked about, well, it actually goes back into October. Cocoa's up 65%. So for me, who likes mochas or loves chocolate, this is painful. Now, keep in mind, this may impact you tomorrow for your loved ones as you go buy a box of chocolate for Valentine's Day or coming up for Halloween. You might be going to other things for Halloween given the cost of rising chocolate. So think that it's interesting, guys, just take a step back and look at the backbone of these foods that we eat, right? What's the most consumed out there? I don't know what the most consumed one is, but as we start to look at the impact here, my argument, at least at this point, based off the data, is that shelter is going to continue to increase. Food, I think, is going to increase, but not as sharply as we saw it, as we'll see it with the housing prices, right? We have some moving up, we have some moving down for food. That should be okay. Now, the other side of this is going to be on the energy markets. And again, I've emphasized a bunch that I think that the crude oil is going to rally here, and that could put a lot of pressure on inflation. But remember, it's only 7.5% of the index. So let's go look at crude oil and natural gas, which may balance each other out here. Here's your crude oil. If you go back to your November lows, really not that significant. Actually, December lows, crude oil is up 15%. But it feels like it's starting to gain a footing. It feels like it's starting to gain some traction here as we come into these, as we start to get closer to the summer months. You may see these prices move up a bit here, and again, impacting inflation. But the one that I don't get, and we had John Rowland on the program the other day about this, I'm actually just about to go and buy a bunch of UNG, is natural gas. What in the hell is going on with natural gas? This is just a crazy chart. I remember hearing John talk about the production price is, down around $2, maybe a little bit lower than that. We are down at 168 right now on natural gas. So when you look at the price of commodities, well, for energy, natural gas is making this an easy one. 53.98% slide from those October peaks to where we are right now. That's just a gargantuan decline there in natural gas. So there's a lot of other things that we could look at that make up this. Oh, there was one more that you guys wanted, which was, yeah, right, Oliver? Whoa, wow. And the thing is, if you jump on something like Boyle because you think it's going to bounce, you better be prepared to take some massive losses. I mean, Boyle, from those same October highs, Boyle is down 79%. So be very careful. Be very careful with that one. It's going out of fashion, apparently. Yeah, I don't know exactly why. I know that there were some production pieces that John had talked about, but I just don't see it. It's not going to go away. I think we'd all agree that natural gas is not going to just disappear. We're not using natural gas anymore. We might be pulling a lot more out of it out of the ground and manufacturing some, but maybe, RG. That was the belief, is that we had too warm of a year, that it really wasn't cold enough to drive the demand to deplete the storage that we had. Now, we had a couple cold fronts that came through, but nothing that was, ice bowl, whatever it's going to be. Nothing there that was overly dramatic to deplete those stockpiles we have. So, at this point, that trend is your friend till the bend at the end. But one thing I like about commodities, we can, let's forget that this says natural gas, right? Let's just say, this is Boyle. Let's look at UNG, or natural gas futures. There we go. If you look at this price chart, crude oil or natural gas has been trending down. It was up at $10 back in August of 2022, and we're at $1.68. Pretty significant decline there. Now, at some point, if this was any publicly traded company, right? It's called Intel, Microsoft, Apple, Google, and it looked like this, it looks like it's going bankrupt. There's something fundamentally wrong with this chart. However, this is a commodity, something that is widely used, and people aren't just going to stop using natural gas. Well, at some point, this will find a floor. At some point, this will find a bottom and have a nice move back up, and I think that point is coming here rather soon. So we'll see in the next couple days. I may go out to UNG, and maybe I'll sell some puts at lower levels. I might actually just buy directionally here, or maybe buy some deep out of the money calls, because no one's buying calls right now. But we'll see. I just sold waste it. Mild winter has played an impact. Yeah, for sure, Liz. For sure it has. But, I don't know all the production numbers. John mentioned those when he was on the show a couple weeks back, talking about some of those production numbers. And, he said he expects it to go down further. Okay, well, it's gone down. Ever since John's been on the show, it's just done nothing but sell-off ever since. Well, hopefully it'll bottom out. But he did say it'll bottom out here soon and have a nice rally back up. The question is timing it, right? What point do you try to jump back into something like UNG? If I bring up that chart UNG and show you on a weekly basis, there's your UNG chart. That's the problem with the futures chart. It just keeps splitting and splitting and splitting. The big issue is service inflation. Okay. Not my area of expertise, Andres, but or Andres. So, this table, it says a lot. It certainly is interesting to see where the different impacts are, and I've been focusing a lot on food costs, which is your second biggest component, but keep your eye next month as we get the CPI numbers. If the bond yields continue to rise, we will see the shelter component of this continue to rise as well, and this may continue to get even steeper of an increase here for rents. Now, let's look at some of the bottom parts here. If you look at airfare has been declining significantly, but that wasn't really a big factor. The biggest declining component of this was rental cars, but rental cars doesn't really weigh much on CPI. If you look here, what's that fall under? Transportation services. Oh, that's got 5% there. I'm assuming that's where it would fall, or maybe recreation. Is a rental car considered recreation services? I don't know what category that falls into. Either way, it's not a major player in the component of the index, yet it's the biggest drawdown. Toys, school books and supplies was declining, appliances, used vehicles. And you see household energy. That's probably because of natural gas. And we'll see about electricity prices as well. But either way, I thought that was a little bit of a view into what's going on with the CPI number is what it might mean for you guys. What does Pepe say? The housing allowance has decreased in 2024 here in Houston because the market cooled down here. Well, it might start to heat back up. So that makes it trickier, right? You get your housing allowance and all of a sudden things start to pick back up with higher rents and higher food prices. Now all of a sudden you're fighting for a bigger allowance. All right, so on the heels of that, actually there's one more, which is a commodity index that I could show you guys. This is the Thomson Reuters Commodity CRB Index. And this is one that John Rowland talks about a lot. And if I go out here and look at it, you can see that it's been drifting down ever since June of last year. And I'm not saying it's bottom, but it's not making new lows. It's making a slightly higher low. And we've seen since December of last year an increase in the overall value of that index to the tune of about 5.79%. Which I would argue is right around a little bit higher than the targeted inflation rate that the Fed wants. So there we go. Anyway, college tuition. Look at that. Yeah, college tuition. College tuition is up 1.3%. 1.3%. No big deal. All right, let me do my top 8 here like I normally do. We have had that Russell was starting to look really nice and rebounding up, man. And I was joking yesterday. I said, guys, I got stopped out of my QQQ short, so now it's probably the time for you to go short because I am currently out of my short, and lo and behold, look what happened. Here, let's just go to look at the triple Qs to start. It's still not back to where I would have been break even. This upper red line here, let me get rid of this one. This upper red dashed line is when I ended up initially going short, I believe. When was that? Oh, I don't remember, but yeah, that was my short entry was this dashed red line. Well, we tiptoed down to it today, 1.6% slide for the NASDAQ 100 today. I still wouldn't worry. I'm not thinking this is anything overly dramatic. A pullback would be absolutely acceptable at this point. It's had too big of a run, so no worries yet. I would say where you start to get a little bit concerned would be if we broke this low we established back on January 31st, right? That kind of pivot low. It's a higher low, and then we broke to a new high. So that is your kind of key point for me on the NASDAQ 100 is 17,211. Now, the big loser on the day, nope, not Bitcoin. It was the Russell, which had 3 fantastic up moves in a row, broke through a high, and, in hindsight, someone's going to go, oh, that was a bull trap. Got you in, and then came ripping back. Well, you know what? Who would have known that was going to happen? Come on. You got to at least know that the CPI numbers are going to come out and could have a huge impact on this. Russell was down 4.17% today. That is a big decline. We haven't seen a 4% down day in quite some time for really any of the broader markets. Certainly we've seen it for crude oil and Bitcoin, but not for the Russell. So that was your big pain point today, although still hasn't made a new low. So all in all, it just gave back most of the gains from the past 3 trading sessions, but still really traversing sideways since mid-December. We already looked at the NASDAQ. Here's your S&P, which we had this line drawn on there yesterday, which said if we open up above that line and drop below it, there you go. There's a shorting opportunity. And if any of you were trading futures last night, did anybody trade that last night and take that trade? Because it broke down around midnight. A little after midnight, it actually broke down below this, but I was already zonked out. So I missed it. When I came in this morning, it was already way below. So unfortunately, it did exactly what I thought it was going to do, but I did not get to trade this one because it gapped by the time the morning happened. If you look at SPY, here's what we woke up to. So unfortunately, that whole piece was missed for me. Bummer, because it looked like a nice setup, and that's what you get for economic data coming out 1 hour before the equity markets open. So let me show you how this impacted. I know some of you care, some of you do not care, but that's all right. It's my show, so I'll look at it anyway. We'll go to a 5-minute time frame here. And you can see right when that news came out, it's like, gee, I wonder when that CPI data came out. Well, there it is, 5:30 on the dot. Of course, I know people knew that. I knew that somebody knew about this information beforehand. But anyway, you can see what's interesting. Last night, we ripped up above that, and I said, keep your eye on this, 50-31 mark on the S&P. Notice where we sold off literally to the exact number. You can see right here at 120 yesterday. That's where my line was drawn off of, and we bounced off at 1, 2, 3, 4, multiple times, hovered there, and all of a sudden, right around mid 12:35 in the morning California time, it broke down below it, and what a great move it had. Unfortunately, I got to sleep sometimes, so that was one that just I'll have to look back on and go, oh well, didn't do anything for me. So that was your S&P. Great follow through on a little bit of a shooting star there. Unfortunately, you had to be awake at midnight California time to get it. Pain point for me today was gold and silver. You saw this trend continue down. Now, I do have this yellow box drawn, which I still am of the opinion that we're going to stay within this, bottom of it being right around 1985 on gold futures. We fell pretty heavily today. 25-point slide for gold, closing at 2007, down 1.27% on the day. But really, SLV making me just a wee bit nervous here. We've got this, looks like a giant descending triangle going on silver. Let me move this line down here. I've kind of been anticipating a little bit of a move up here, but it's just not happening. That $20 mark is a pretty significant point for silver. Given my long-term belief that silver is going to rally up here, if it does break 20, I will probably sell the 19s and see if I can get some premium there and be happy to buy more at 19. But not looking good. It was down 2.7% today for SLV. That posted some nice losses in my accounts, but not done yet. We'll ultimately have a winner on that trade for sure. All right, top 4. Bitcoin. You have a Harami formation. I have a friend who was sending me a message today going, oh no, are you going to get out of your Bitcoin? I said, man, do you not know me? I am not getting out of Bitcoin. I don't care what pattern it has, what shape it has. I am not getting out of my Bitcoins. Make that very clear. We have a Harami formation today. Now, for those of you who are candlestick lovers like myself, what a Harami means, it means pregnant. And there's a belief that will be the birth of a new trend, typically. So let me get rid of that trend line there. And the belief would be that if we go from current prices and we now break down below this line, then all of a sudden we're going to get a much bigger follow through. So it would not be surprising to see a pullback here in Bitcoin. If you look at just the sheer numbers from February 5th to our peak we had today, we have almost a 20% move in Bitcoin in 6 trading days. That is pretty significant move up. I certainly believe that there would be a pullback in this one. But you do have a Harami. Again, for those of you who are active traders, go for it. If you want to go short Bitcoin tomorrow on the Bitcoin futures or go to some of these ETFs like BT, go for it. So BITS, someone asked me if there's an inverse Bitcoin ETF. Yes. You guys notice this picture here? This is BITI. This is a short Bitcoin ETF, and the only issue I have with this one is going to be fairly low liquidity, even though it's trading a couple million shares a day, but that is a bullish Harami formation. Yeah, right, Kerry. Some people call that a blow-off top. Yep. It's just typically a blow-off top is going to be like an island reversal, be even higher, a gap up on just sheer exhaustion. Now, the one thing to keep a note here, at least for me, and this is different because I'm looking at the Bitcoin futures, is no, that friend does not watch the TraderMerlin show. Nope. It's funny. I got it's really hilarious. I have a ton of friends and 99.9% of them don't watch the show. I'm like, all right, I don't take it personally. I hope that the people that do watch it find it of value, and if you don't watch it. All right? If you don't like the show, don't watch it. If you don't like it and you think there's something that could be better, you can always message me at the email on your screen, and I'll do my best to make the show better. Anyway, a blow-off top to me would be a little bit different. So while this does look like a Harami formation, I'm not overly convinced that there'll be a pullback. And one of the main factors for that is look at the volume at the bottom here. Now, again, this is Bitcoin futures, so it's a little bit different than trading a stock. But there's no drama. There's no excitement. And how do we know excitement? We look at volume. When you have really high volume spikes down here at the bottom, that's a sign of emotion, fear, greed. And those are the times that you love to capitalize on. And unfortunately, if this was in fact going to be a true reversal, I would love to have seen volume much higher than normal. And honestly, it's really not. So I'm not going to obviously be shorting Bitcoin tomorrow. I just don't do it. But if you are in that camp, keep your eye on volume. Volume here makes me feel like this is not a legit pullback type of formation. We haven't seen the blow off top with emotion. A blow off top, in my opinion, would have much, much higher volume. Kind of like this spike back here on January 11th, right? Even though you see the big shooting star topping tail, huge volume, and then what happened? Gave up the ghost and fell dramatically. We don't have that right now. What about RSI? I don't think I can add it on here. I have enough indicators. RSI is going to tell you that this thing is dramatically overbought, right? I don't even need to put it on here. Let's see if I can. Put on RSI on here. Yeah, relative strength indicator. Yeah, I can't put it on because I don't have enough. For some reason, I bought a subscription on my other account, so I have to transfer over all my layouts to my other account, which I should probably do. But yeah, let me work on that maybe over this weekend and getting everything migrated over. But I've got a bunch of stuff going on. But RSI is just going to tell you it's overbought, right? There's no way that you could look at a chart like this and tell me it's not overbought. If you believe this is not an overbought situation, then you really don't understand price action. That is dramatically overbought. And if you put on stochastics or MACD or RSI, they'll all show you the same thing. Let me delete this moving average, and I'll add in. I can only add in 2 indicators on the free version, but you wanted RSI. There we go. So there you go. You notice that RSI was up above that 70 mark, which is technically overbought. Now all of a sudden it just tiptoed back down today, which is telling you, sell it. As we come back in, its belief is we should come back and revert to the mean here, which would be 50, which would probably put Bitcoin down around 46,000, somewhere in there. But yeah, again, that's just an indicator that's reading historical price action, and I don't believe there's any guarantee of that following through. Oh, I already had it on there. Let me add on one more here, just because people love their indicators. And this, I prefer stochastics over RSI. It's a matter of personal preference. So here's my stochastics, and notice it's above 80, which is overbought. And now all of a sudden you have the %D crossing below the %K. It told you to short today. It's already saying go short and be short according to stochastics. Now, this is where it gets tricky, right? For US traders, you've had this dilemma. I know you have, which is the indicators are telling me to sell. I've got RSI saying to sell it. I got stochastics saying to sell it. I could bring up MACD, it's telling me to sell it. I could bring up CCI and ADX. They're all going to say to sell this thing. But really, what is the price chart telling you? Price chart's telling you that momentum is picking up. This thing's gaining steam. And if you look at the longer term chart here, it's ripping. A pullback would be okay, but the grand scheme of things is if you are playing a pullback, you're going counter trend, and your gains are probably going to be rather small. So be careful if you are. Hey, Jordan, good to see you. I get Jordan Matthews in here too often. One of these days, guys, we're going to get Jordan Matthews on the program. He taught core strategy. He just wrapped up futures. Where are you teaching, Jordan? Are you in Colorado? You on the road? Wow, Jordan, are you making my viewers late? That's just not good. No, I'm kidding. Anyway, so that was just a little bit of peppering on, kind of indicator usage here. I personally, I look at the pattern itself, knowing it's a Harami, knowing the statistics behind Harami. If I was comfortable shorting Bitcoin, I would probably look at this as a potential short tomorrow. But right now, it just feels like the momentum for Bitcoin is getting better and better and better. Oh, nice. Say hello to my friends out there in Denver for me. Say hi to Cam and all others. Let's go. I got 2 more here. We already talked about this one, which is, I don't want to call this a developing story. This could get much more dramatic here. Remember, if you think about bond yields and what's driving yields, the argument for yields to go down is minimal. The argument for yields to increase significantly from here is actually a much better argument. So for anybody who may not understand that and why the yields are going to rally, just type it in there and say, I don't understand why you think yields are going to go higher, and I'll explain. But it looks to me like we have turned the corner here on this pullback we had on yields from October to December. Now all of a sudden things are looking better and better. We had a great breakout today. Let's see if we get follow through tomorrow. And that is going to be driven partially by its friend the dollar, which also broke out from supply zones. You guys notice we've had these two supply zones drawn there. I mentioned many times that you expect this thing to rally sideways, rally sideways, rally sideways, and now rally. So the question now is, how high does this rally? Does it get to that 105.80 mark, which is my target? I don't believe it will do it in one swoop. I think we're going to rally up maybe another day or so, go sideways, and then break out again to the upside. But this thing is just stair-stepping higher and higher and higher and higher. And notice, if you are using stochastics, what's stochastics been telling you? Sell, 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 over and over and over again on stochastics. And you'd be losing money hand over fist. Oh, but wait, Merlin, RSI is a better indicator. You should use RSI. Well, RSI technically has not been in an overbought situation on the dollar index, right? It hasn't been above 70. So go with the trend at this point. Sometimes I have a friend who is holding off on buying Bitcoin. Is he expect to drop after halving and then a real run up? Okay. I think it could drop after the halving, but I don't think you're going to get much. And again, my input for anybody who's looking to buy into Bitcoin, I think it's too hard to try to time Bitcoin. So if you had, let's say, $1,000 that you wanted to buy Bitcoin, I'd say just buy $100 a month or a predetermined amount and just do it periodically. And don't think about, oh, is this the dead bottom? Is this dead bottom? If you get a big pullback, maybe you do buy some more. But this is not a 2-month, 3-month play. This is a year and a half play at this point. This until November of 2025 is when I think that becomes a very, very interesting one. No worries, Jordan. I'm just kidding. No, it's all good, my friend. Let's see. What else did I have here? So that was number 2. And then my final is crude oil. Yep, exactly, Oliver. Dollar cost average in Bitcoin. Every now and again, I buy some more, even though it's my biggest position and I have plenty of it. I still want to keep accumulating Bitcoin. All right, let's look at the last one here, which is that crude oil chart. This pullback we had from January 29th to February 5th kind of made me a little bit nervous, but notice we did not break the lows. So we're at a challenge point right now. Today's move up in crude oil was great, up 1.2%, closing at 77.87. But now we're coming right back into an area that's had issues, right? You go back into these peaks right around 79, 79 and a quarter, getting all the way up to close to 80. That's a challenge spot. So we're almost there. You know, if it's going to have a little bit of a pullback, it's probably going to do it in the next day or two. But my expectation is you'll probably see this continue to drift up. Again, summer months, oil gets they try to push oil prices down in the summer months to encourage us to drive, but I don't know if I buy that whole logic. Anyway, there you go. That's what I got to talk about today. Was there anything else? Oh, the one thing I know that I think it was Margaret who always give me a hard time. She says this is my favorite chart. Well, here it is, Margaret. There's my Fed meeting minutes. Now, one thing that's unique about this one is you notice that this does include the CPI report this morning, because this number was updated as of 3:51 Central Time, which is, this does not include 3:51, because that would be, does not include the current CPI number. So this will get updated as of tomorrow, but notice we're seeing a shift here. All of a sudden, all the forecasts a month ago was, hey, maybe we'd have 50 basis point increase at this next, or decrease at the next meeting, which will be here in just a couple weeks. Nope. Doesn't look like it. That was 4.1. Now it's at 0. There was a 76.9% chance, according to the market, that we were going to see a 25% cut. That's now been dropped to 8.5%. So it looks like the market is pricing in what I believe should happen, and I'm not flip-flopping. I've been saying I think this is going to happen, and that is they're going to hold rates definitely this meeting and most likely the next one. My guess is once we get into the summer months, then they'll start to think about cutting. But if inflation ticked up today like it did, that changes the talk track here for the Fed, and they certainly are not going to cut rates. So there right now is an 8.5% chance of a rate cut happening at the March 20th meeting. But unless something dramatically changes, I'm not going to mess with that one. Let's go to what Mimi says, Palantir going down. Do you think it's time to short PLTR? Well, it's a tough one. I mean, you're playing with fire, Mimi, if you're shorting Palantir. I don't think there's any argument I could get from anybody in here. And if there is, I'd love to hear it. Please type in the chat if you disagree with me in any way, shape, or form on this. But the argument is that this is the hottest market in the world right now. The hottest market segment is AI. So I remember back in the late 90s into early 2000s, if you put the word .com on your business, your share price would double or triple. Even if you did nothing with the internet, you just said .com and every shareholder in the world is like, oh, I gotta buy it. Same thing happened. Well, we've seen it happen a couple times, but really this AI craze is creating that kind of FOMO of people just trying to gobble up anything to do with AI. Obviously, NVIDIA, the biggest benefactor of that. But you saw it the other day. I forgot the ticker symbol we looked at. I think actually someone is still on here. BMR, right? BMR yesterday. I didn't look at it today. Wow. BMR up another 41% today just because they're going to be working with NVIDIA. If you look at PLTR, you know, I don't know if I would have the stones to short this one. You got to be real careful because it's one of those ones that one small AI piece of news, this thing's going to vault and go much, much, much higher. I mean, look, here's the part that blows my mind, and sometimes things just don't make sense. Let me go to FinViz real quick, and I'm going to bring up the biggest market cap companies in the world. And if you think about the impact, is there anybody in here who believes that that Amazon is on pace to be one of the biggest companies in the world, that it's the most utilized company in the world? Anybody disagree with that? That like it seems like it's everywhere, whether you're using Amazon to stream video on, you're shopping on Amazon, getting package deliveries on. I mean, it seems like it's everywhere, right? You would think that's got to be one of the biggest companies in the world. Well, let me look at the market cap here because this just switched today. And notice that Amazon, which is, in my opinion, one of the greatest companies ever, is now number 6. NVIDIA, who most of you couldn't really even describe what that A100 processor does or tell me a company that's actually using one, they now have a bigger market cap than Amazon. And probably by the end of the week, they could pass Google. And you know, then all of a sudden, they're an elite club with Microsoft and Apple. You know, the key here is, does this AI thing pan out? Does NVIDIA continue to deliver on this hope that everyone has for AI? Or does it just peak out and all of a sudden come drifting back down? I feel like it's a little bit overdone right now. If I was to stack up NVIDIA next to Amazon, there's no way, it's a 100% choice for me, I'm buying Amazon. Just because I know it, I touch it, I buy it, I know it intimately. Amazon is where I'm going to be buying. NVIDIA is a far more speculative play. And look at the PE ratio here on this one. I know Tom loves the PE ratios. But you look at the PE ratio of Amazon, it's at 58. The PE ratio of NVIDIA, 95, right? So you're getting close to double the price to earnings rate, meaning, yes, they're earning money, but their price is significantly higher. So I don't know. I do think that there's a pullback potential here, Mimi. I was kind of just all over the place with my explanation there. And it does feel like it's rolling over now. So yes, I do think a pullback is coming, but I'm not going to short AI. I learned that mistake back in the .com bubble. You try to short some of these .com companies and they just all of a sudden next day they're up 100%. Made no sense. I have witnessed multiple times grown men cry. I have witnessed people grab computer monitors and throw them through windows. I have watched this one guy, funny story, this was Qualcomm. So Qualcomm was one of the biggest stocks back in 98, 99. I mean, it was just all over the place. And I watched this guy come in the trading floor. I talked to him a couple times. A nice enough dude. He seemed fine. And, you know, he's up right by the front door entryway. I can picture his face today. And, you know, he just has a really glum look on his face and doesn't say a word to anybody and just leaves. So I learned what people did right and what people did wrong by looking at their trade sheets. So I went and I grabbed his trade sheet and said, what is he doing? This guy, Qualcomm was up 100% in a day. It doubled in one day. And so his mind was, this can't keep going on, right? No way. So he shorted 1,000 shares of Qualcomm. The next day it jumped like 40 points. So he took it home overnight. But he was so upset that day. So he was shorting it and down a bunch of money, and he just left the building. Came back the next day. Obviously, the stock had gapped up 40 points, so he's in 1,000 shares. He's now down another $40,000, and it continued to rally another 20-plus points intraday. Well, when he came in that morning, what do you think he did? Oh, it's got to come down. He shorted another 1,000 shares. So that $20 rally cost him another $40,000. By the end of 2 days, this guy was bankrupt, gone, never heard from or saw him again, nor did he ever say a word to anybody about it, just disappeared. To me, that's the challenge. When you're shorting the hottest thing in the market, back in the 90s was the .com. Right now, it's AI, hands down. So I'm not going to short these ones. I just don't have. If you are going to short it, do it with a very, very small amount because, man, I'll tell you, if Palantir says that they're now the exclusive provider of data resource for NVIDIA, this thing's going to double overnight, regardless of what its PE ratio is. All right, Tom, AI is a new EV, it's a new Internet of Things, it's a new stable. Yeah, chargeable scooters. There's always something new, right? There's always something new. Amazon continued to grow in e-commerce fulfillment. Yep. NVIDIA designs and buys chips from Taiwan. Exactly. And that's my point, Tom, is, I'm not going to fight AI. I think AI is incredibly valuable. I think there's tremendous plays here. However, I don't know personally, if I look at it this way, and this is a much longer term play. Maybe we can have a bigger discussion on this at some point. If I look at buying NVIDIA for their A100 chips or whatever that next generation of chip is, I'm betting that they become the exclusive provider and that benefits them. What I'd rather do is I'd rather focus on somebody who's well established, a behemoth of a company that is struggling to innovate or streamline operations. And if I know that Microsoft is now getting into generative AI and using AI for marketing and all these different aspects and search engine optimization, whatever you want to, then they're going to make a lot more money. And I know that's going to happen. Versus, is Microsoft going to buy everything from NVIDIA? Or does all of a sudden a new competitor come up like ARM or somebody else and make a better product? So I'd rather buy the beneficiaries of AI and ones that I think are going to do better down the road because they're improving their business models and profits based off of AI. Cutting employees, right? I mean, I think the big thing you're going to see happen here soon is layoffs, probably not this year. I think a couple years down the road, we're going to start to see a lot more layoffs. I look at anybody here who's a copywriter or a script writer. I apologize, you may be brilliant at your craft, but AI can replace you in a matter of seconds. It's crazy what AI can do, and certain jobs are going to start to get replaced. And it's not that I don't want to have employees, but let's say I have a news desk, and my job is to write articles for people. So if my job is to write articles, and I have clients, and you tell me, hey, I want articles on this to give to my customers, I could hire reporters. I could hire the best journalists from the different universities in the U.S. Or I can go get ChatGPT 4.0 or whatever the next version is. I could have it write the articles for me. They come to me. I do a quick little editing on them or hire people just to do editing. And now I no longer have to have 10 journalists. I could have one that just does the editing for ChatGPT. And those 10 journalists are all making $100,000 a year. All right, boom, just saved myself $1 million of straight profits. Do you think that's a reality or far-fetched? I think that's where we're headed. And a lot of companies are going to be laying off employees because AI has removed those businesses and made it much more efficient. I don't have insurance to pay for them. I don't have 401k contributions for them. I have no HR violations for all those 10 employees I just got rid of. It's tough. Can we get rid of lawyers? Well, you're going to need some lawyers along the way. And, one area of being a lawyer I think might become much more popular is intellectual rights, intellectual property, right? IP lawyers. Probably going to do really well. Do you ever scalp or day trade futures? Yes, I do. I do more swing trade with futures, but it's been so tough with all the things. I'm kind of, I'm getting a little frustrated that I'm not trading as much as I want to. So I may have to make some changes here. Mike says, way back, the same shorting situation happened with an AMG individual trader, kept shorting Amazon until he went broke. Yep. Remember, the markets can remain irrational longer than you can remain solvent. So you have to have stop losses in place. My loss I took on the NASDAQ here a couple days ago. So what? It cost me a little over $1,200. But it could have kept on going and kept on going, and would have a much bigger loss. So you have to just have a number, have a level, and say, I'm out, I'm done. We might need an AI president. We may have one here soon. All right, I went way too long. What is happening to my 1 hour shows? Just not working. Supposed to do Have you made a YouTube videos on AI companies? No, Owen, but I did do an article on some AI companies. So let me real quickly share that with you. And 1 second, I have to go find. I haven't written an article for Bar Chart in quite some time, although I do have a new article that I'm thinking about writing. So Owen, if you go here, you click that link. If you scroll, it's one of the first articles I did for them. So just keep scrolling down. There's a lot of articles I've written for them, but the first one there is called "Artificial Intelligence: Embracing for the Future." And here, I'll just copy that article and click it in here and put it in the chat for you. There's the link directly to the article. But yeah, that I highlight some of them, but there's dozens of small, little, tiny ones I just don't know about. I don't know about. I actually have a friend that I wanted to interview him and bring him on to talk about AI because he works for a very, very, very prominent AI company. And he's like, nope, I don't want my face or name out there. I'm like, okay, cool, we'll do it. We need the Zoom show. We got just too much going on, buddy. I should do a Zoom show. I know I should. All right, I just had Forex Factory up there, so let me bring up your economic calendar for mañana. Here's what we've got cooking for Tuesday. Oh, wait, Wednesday. What day is it? Yeah, it's already Tuesday. My goodness. It's trivia night. Dun, 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 dun. If you look at the U.S., you only have one thing. Crude oil inventories is pretty much it. Other than that, you got a bunch of central bankers speaking from around the world. You got one for the UK, you got one for Australia, and you had one down here. I thought we had one for, oh no, I thought we had one for Japan, but nope. Other than that, not much. You got GDP number coming out for England. You also have employment and unemployment data coming out for Australia, but that's pretty much it for tomorrow. Now, let me show you your earnings calendar. So here's what happened for us today. Get that Tuesday number out there. A lot of beats, all right? The only ones that didn't beat here were Moody's and Zoetis. But Airbnb, Shopify, and Coca-Cola beat. But here's what's happening tomorrow. There are some big names that are coming up. You have Cisco Systems, you have Sony, and CME Group, Kraft Heinz, Energy Transfer Partners, all reporting earnings tomorrow. Kind of a mix between pre-market hours and after hours. So there we go. Let's see. Maya says, any trading book that is like as big role of the Bible in your trading experience? No, not really, Maya. There's nothing that I would say has been this big, great epiphany guiding book. I think that the more you trade, the more you learn those lessons, and you can read about someone's lessons. It's like reading about Mike Tyson's boxing history, and he'll tell you, oh, I got in there against Evander Holyfield, and he hit me with a 1-2 combo, and it hurt. You don't know what that feels like. He can describe it in the most articulate words possible. You'll never know what it's like to get hit by that guy until you actually get hit. So to me, trading is more, you can read those books if you want. I read a couple books on technical analysis when I started. Didn't really care. It didn't really help me much. If the thing that I did like, there's a book called Reminiscences of a Stock Operator by Edwin Lefebvre, which is more a story about a trader's journey. And I really found that one interesting. I like that book. Anything by Dr. Alexander Elder, Mark Douglas are good from a psychological perspective. Dr. Woody Johnson also has some pretty good stuff. But if you watch the videos on my YouTube channel, just go and click in the search my YouTube channel and type in Dr. Woody Johnson. He's pretty good. That guy's got a real good grasp on obviously psychology, but trading and combining those two together. It is Fat Tuesday. That's right, Questlock. I have a little, maybe a little bit of Fat Tuesday trivia going on tonight. Is a trivia gig like a hubby or a hobby, you mean? I think you mean like a hobby. Yeah, it's just for fun. I'm a social animal, and I like to get out and do things. So I host trivia on Tuesday nights at a local place here in Costa Mesa. So it's fun. It's fun. I get to make up 5-6 rounds, entertain for 2 hours. It's good. The Turtles way? Yeah. And it's funny, Thomasina, because I'm going to be assumptive here and say that Turtle's way isn't about like how to have the best trading strategy. It's more the story and importance of following a set of rules and saying, these are the rules. I have to follow these rules or I don't progress. And when you do follow those rules, minor modifications, minor tweaking to optimize what you're doing. But without a set of rules, you're gambling. And that's really what the Turtles did was follow rules. That's the whole thing is about, following rules. Yeah, no, I don't do trivia like a hubby. No, not like a hubby. All right, guys, that's going to do it for me. I was planning on a 30-minute show today, and here we are at 56, even though Big Eb isn't here. All good. Thank you guys so much for joining us today. Tomorrow, there was a question that came through, day in the life of a trader. All right, I'll do one. I'll do a day in the life of mine. Yeah, there we go. You always save your questions till the end. What were the original rules? There's a few. Oh, okay. I don't want to ruin the book for you. Anyway, that's going to do it for me, everybody. If you got something you want to talk about, tomorrow I'll probably do one for the viewer who asked about it on kind of about trading routine, what are things I do, what I look at, what I start with. I can do that for you. That's fine. I will do that for tomorrow. If you have something else you want me to do, email me, TraderMerlin@gmail.com, or put your comments down below any of the YouTube videos on the YouTube channel, and I will address those. If you are new, hit that like and subscribe button. I will talk to you guys tomorrow. Take care.